What's going on, everybody? My name is Jason and I'm here with X91Investing. In this video we're going to be talking about trading psychology. So when we enter the position, there's going to be various different levels and various different times we're going to be emotionally involved in a trade, especially before, during and after, right? As you might expect. After, not so much, but before and during, your emotions are just horrible, and they're the worst possible thing to have involved in a trade. Your trading should be robotic. You should have a trading plan. So I use these little books, really inexpensive. They're only about fiver in Mr. Price. Very good quality, and I just like the way they accept ink. So I just write my trading plan in that. You stick to that plan and it eliminates a lot of the trading psychology and the emotions that are at play when you enter a position. So look, we're going to explore it more now, so come on. Right, so lads, as we were talking about in the intro, we're going to be talking about trading psychology. And trading psychology on a basic level is how you feel before you open, after you open, during, before you close, and when you close a position. So throughout the whole trading experience, it's how you feel and react. So winning, you'll react different winning than you will losing. When you're on a winning streak, as I have on the screen, you're feeling different to when you're losing, etc. Right? So we're going to touch on the first topic, winning streaks and losing streaks. A winning streak, from a financial point of view, it's a great thing, right? You're benefiting financially, but when you're winning, you're going to be gaining confidence. And if you go on a winning streak of 10 or 15 trades with very few losses or no losses at all, you're going to feel really good about yourself. You're going to think you're the best trader ever. But when you talk about trading, 60 to 70% is an absolutely phenomenal success rate, right? And if you're on a 100% success rate over 10 or 15 right positions, you are being extremely lucky, because no strategy that I know, no strategy I developed, has ever surpassed 70% of win rate, right? So if you're winning tenfold, 15 times, there's a lot of luck involved in pushing you that bit further. There's some strategies now, like a 200 period on a monthly chart, sometimes would have a very high successful rate, but that's a very long-term strategy that you're only opening positions every God knows how long, right? So on a winning streak, you have to watch your emotions, right? And emotions, this word is thrown around on YouTube the whole time in the trading world. Basically what your emotions and controlling your emotions means is basically when you see your price running and coming to your stop loss is there for a reason. Don't pull your trade just before don't pull your trade before it hits your stop loss. You've set the stop loss. I'm happy to take that. That line is there because my position didn't go the way I intended, and if it goes down and hits it, that's on me, right? And that's a very humble way that you have to develop as a trader, right? And back to the topic of the winning and losing streaks. When winning, you're going to feel great. You're going to be benefiting financially, but you're going to get cocky. And you're going to think you're great, and you're going to load positions, right? So if you're opening positions of 5 microlots, right? So $5,000 or 5,000 units of currency, right? But that's your standard trading lot size. But you're on a winning streak, and you look at your performance. If you're logging your trades like a really good disciplined trader should, and you look and you see that you're making, call it €70 on this trade and 65 on this one and 90 on this one and blah blah the whole way down, right? And those are your positions, and you say, oh, but if instead of using a 0.5 and I was using a mini, if I was using 0.1 lots, instead of it being 70, I'd have 140, and instead of it being 90, it'd be 180. And you see that could be what's happening. So you might on your next position load up, but you're going to lose 4 times what you lost if your next trade is a loss, and you're going to lose 4 times what you lost, what you would have lost if you lost on those previous trades. And another concept, just touching on it here, the winning and losing, is gambler's fallacy, right? Gambler's fallacy, I don't have it written on the screen, but what gambler's fallacy is when you go on a losing streak, right? And you've lost 10 times in a row, and you're there, and I'm going to load up on my next position because I'm owed a win. That's gambler's fallacy. Thinking that when something's based purely off a chance, right? If you're in and it's called gambler's fallacy because it's all to do with casinos and cards, blackjack, the roulette wheel. Roulette wheel is a great example because that's purely chance, right? The roulette wheel is there, and on the roulette wheel you have however many numbers. I don't actually know, and you have lost 10 times in a row, and you think, okay, no, I'm going to throw everything on the green single zero, right? Because I feel I'm owed a win, right? You put all your chips in the one basket and you lose, right? Gambler's fallacy is you thinking that the market owes you one and you think you're going to win on your next one. Or you've lost 7, you're definitely meant to win the next one. Or if you're flipping a coin and you flip it 6 times in a row and it's all tails, you think that it's time for that to be a heads. So you're going to bet that it's a heads next time. That's what gambler's fallacy is. It's the gambler falsely thinking that he's owed one, or things will turn around because they've been a certain way. That's what gambler's fallacy is, and that's completely false. The market, if your strategy isn't working, it's going to be reflected in your performance. If it's a good strategy, you might go on a winning streak. If it's a bad strategy, you might go on a losing streak. Just because it's a losing streak doesn't mean your strategy is bad. It might need a tweak. It mightn't. It might be your strategy isn't suited to current market conditions. Your strategy might be good for a less volatile market, and the market might be after picking up in volatility in recent times or whatever. That could be affecting your strategy. But that's with winning and losing streaks. You might lose confidence on a losing streak compared to gaining confidence on a winning streak. And on a losing streak, if you go on a losing streak, you might be after losing €150 and you might feel that you need to pick that back up. And you load your positions because you're revenge trading, which is another whole concept in trading, where you feel that it's taken so much from you and you need to take it back. And that's what revenge trading is. You're loading up on a position because you've lost so many and you feel that you need to get that money back. And I've mentioned this before, but if you have €1,000 account and you lose half that on a losing streak, which is ridiculous, that's no risk management, loading positions, you're going to blow half your account in no time, right? And you get to half, you go from 500 or go from 1,000 down to 500. You've lost 50%. How much your account do you have to get back up to 100? 50% of it will bring it to 75. So it's 100% of your account you need to gain to get back to square one where you started. You put in €1,000 into your broker's account and you say you start trading it and you're really bad with risk management, you're really bad with your position sizing and all that, and you end up with half what you started. You need to get exactly what you have twice. You have to get what you have and add it onto it. So it's 100% of an increase you need on your account. And that's hard to do. And especially if you can, whatever it takes to lose, it takes a lot longer to get it back. And when you're talking about small things like a 5 loss, there might only be maybe a couple of percent extra on top of if you lose 10%, so that's 5 losing trades at 2%, you'd lose 10% of your account. So that's 10% of your account lost. You might only need 10 or 12 or 15% to get that back up to the full value, if you get me. So on to loss aversion now, right? Loss aversion is when you feel your losses a lot more than you feel equal or equivalent gains. Basically, you lose €50, you gain €50 on another trade, but you're sickened you lost €50, but you also gained it on another trade. Or you lost 100 and you gained 100 another day. You're sickened you lost 100, but you also won 100. It's not that it's balancing out, it's only for the point of the example. You lose 100, it feels a lot worse and you're sickened more because you don't have that anymore. But the 100 is just another 100 in your trading account of €1,000 or €10,000 or whatever. That's loss aversion, right? The whole theory of loss aversion is your losses are felt a lot more than equal or equivalent gains. Right. The endowment effect is you value what's yours, right? I have the keyword on the screen. You value what's yours. You're in a position, that's more so what the status quo, the endowment effect and the status quo, they're kind of similar and interlinked, but they're clear differences. So with the endowment effect is you value what's yours, and you don't want to lose it. Basically, you don't want to lose what you have. Whereas the status quo bias is you want to stay in your current position, rather than there being a better opportunity on the 7,000 other stocks in that exchange, right? Or the 6 or 8 different other major currency pairs, but you don't want to get out of your position on GJ, because GJ has been very good to you over the last while. That's another false claim people have. And I might have thrown it around maybe in a previous video or in a live stream, that GJ has been very good to me in the last couple of weeks. No, my strategy has been working on GJ. The way I'm implementing my Fibonacci's and the way I'm doing my Bollinger Bands, or whatever strategy I'm implemented, that's working currently. Bollinger Bands works on volatile markets, on mean reverting markets, whether it's a stock or a cryptocurrency, or a stock cryptocurrency, or a forex currency. So with the status quo bias, you want to stay in your current position. You don't want to change. You feel that if I get out now, it's going to keep going, right? And a lot of people might be feeling that way about Bitcoin at the moment, right? And I see a lot of people throwing around things saying, Bitcoin's going to drop. I closed out of my Bitcoin position and all this, and I had a few people talking to me about the kind of way Bitcoin is at the moment. Should I close out? I'm currently still in. I'm still holding my Bitcoin position. I've been very, very bullish over Bitcoin with the last 6 months. When I really loaded up, I put my account to, currently it's sitting at 42%. So my portfolio is 42% Bitcoin at the moment. So there's a lot of, obviously if you're 42% of your portfolio in Bitcoin, you're very, very bullish on it. But the reason I'm not too keen on getting out is because I'm in it. I have a lot of profits since when I got in at 8, 10, 12,000 to the dollar on Bitcoin. So it's going to take a while for it to pull back down to break even, or to come into any form of a negative balance. But that's I feel I'm very good at managing my psychology and my emotions. Status quo bias, I do notice it creeping in on me sometimes, and FOMO as well, right? FOMO, the fear of missing out. You might have heard it thrown around in recent times. The fear of missing out, right? The biggest one of all was Dogecoin, right? People were up in arms about Dogecoin, and GameStop, AMC, Nokia, BlackBerry, whatever stocks, Zomedica, any of those ones, costs, they all exploded, right? And people getting in after the fact. I was scared. I have the fear of missing out. I have FOMO. I didn't get in when the ship took off. I'm getting in off a ladder 600 rungs up, right? You're not getting in when you should have, basically. And with FOMO, it can be the worst possible thing. And I know a lot of people that got in after that initial surge, and then just it trickled back down again. And there was another little small impulse, but it just went up and it trickled back down again. What can you do? There's going to be those traders that will hop in, and when they're not well versed in the psychology of the game, they need to really, really zone in on, if you have a specific area of trading psychology that you lack, that's something you really need to push on, and you need to have that written. I find writing things, I used to really suffer from the loss aversion theory of when I lost at the start, right? When I was hitting a stop loss, I lost 20, I lost 50. But you might have had a good week of it. You might have 300 pips plus at the end of the week, but that loss of 20 or 30 pips earlier in the week, you're still feeling that, and you might have made tenfold what you lost. But why? It's such a minute figure in the bigger picture, and that's what really helped me kind of come to terms with loss aversion. That when you look at trading in the bigger picture, and when you look at trading on a day-to-day basis, I might have a day where I open 6 positions and I lose all of them. Then the next day I open 8 and I lose 6 of them again and I win 2. But then at the end of the week I look and I had 23 good positions, and those were my only losers, but I just had 2 awful days. There's 3 good days there with it. Or another week, you could just go tit for tat. You could just win one, lose one, win one, lose one, win, lose. If you bang out a 50-50 in the week, you're still green. You're still profitable, because if you're following good risk management, you've only lost 20 pips, 30 pips, you've gained 60 and 80. Or you might have entered a 1-to-1, a 20 pip win, 20 pip lose, and you could have been paddling along a couple of those. Depending on how loose or good your strategy is, you'll be trading different R ratings or risk to rewards. So just to give a general overview of trading psychology, once again, trading psychology is how you feel before, just after, during, just before you close, and when you actually close your position. Winning and losing streaks, don't get overconfident, and a good way of kind of understanding that is having your trading plan and making sure you always follow it. And always following your trading plan, you need to be robotic in your trading, right? When you have your trading plan, it kind of eliminates a lot of these kind of factors. At the end of the day, you're the one that clicks the enter position. You're the one, not necessarily always, but if you're pulling a position just before you take profit as well. If you're on a winning streak and you feel that you're doing so well, you might be more inclined to pull it just before you take profit. And you lose those 5 pips that you're every time. If you open 10 positions in the week and you lose 5 pips on every single one of those, that's 50 pips that you've just missed out on, because you're just pulling your trades just before they hit those take profits. So it's there's loads and loads of things like that. Loss aversion, don't value your wins as much as your losses, because losses, you feel your losses a lot more. And it's true, you will feel your losses much more, but it's kind of just blocking that out and understanding that money is equal. A win equal to a loss is break even, obviously, and you don't move anywhere. But a loss of 50 is the same as a gain, and value that gain as much as you value that loss. Obviously, to the extent, if it's a -5, you feel on the loss, value your win to a 5 out of 10, right? Endowment effect, value, so you're going to place more value on something that you own. So a good example of it would be your car, right? It's kind of sentimentality. There's sentimental value on your car, right? You might feel sentimental, or if you were given this pen, you'll be less inclined if someone was there and they said, "Oh, I have another pen worth half of what that pen is worth." But you're going to be worth equal to what you have, but your one might be a little bit damaged or whatever. But you still value this pen more than the same pen that another lad might have, if you get me. Status quo bias is you stay in your current position because it's yours. Similar to the endowment effect, you value what's yours. You don't want to get out of the position because you could rise higher in the position that you're currently in. Or if you get into another position and it goes against you, "Oh, why didn't I just stay in the one I was in?" Happened to me numerous times in the markets. And FOMO. Just to conclude, FOMO, you're scared that other people are making the profits and you're missing out. Fair enough. You're going to feel it, but I think I saw on an ad for, I don't know if it was a phone carrier or whatever, but instead of calling it FOMO, experience JOMO, the joy of missing out, right? So it's hard to feel kind of joyful in the situation of where you possibly could be losing money, and just in case, you can see that there. You're not missing anything in behind my face, but the joy of missing out. So you didn't lose money. Look at it that way. You could have been in and you could have lost, right? You could have been in for that big surge and it just collapsed. You could have entered on earnings and the earnings go completely against you. If you don't have the fear of missing out if that rockets, or if you see a stock price gap, right? Typically when you see a stock price gap, you're going to short it, because sometimes if a company issues more shares, there's a stock trading strategy about share equity dilution. So if stock gaps, you can short it to come back there. If the company dilutes, if they open more positions in an SPO or opens more shares in an SPO, you can short that to come back down to a specific price that they mention in the press release. So that's a whole topic for a whole nother video. I'll be bringing out strategy videos, how to develop a trading plan and all that kind of stuff. So look, lads, I hope you enjoyed this video. This should be up today, Thursday, and there'll be plenty more stuff like this. If there's any trading psychology kind of experience you have, share them in the comments, or if there's anything that you are experiencing that you don't really know the name for, I could do a video on that, or maybe collaborate a couple of things that people tell me about, or whatever. But look, lads, thanks very much. Subscribe just so you don't miss the Sunday sessions. So the Sunday sessions are always very, very valuable. That's what people keep telling me anyway. And yeah, just leave a like. It shows me that you appreciate the content, and subscribe, just as I said, so you don't miss out on the live sessions and these videos when they go up, because I feel if I had these videos when I was starting off, I'd be a million miles ahead of where I am today. So look, lads, thanks very much, and I'll see you all soon.